Hi, this is Bill Wood from Disciplined Trading Decisions, inviting you to take a look with me at the S&P 500 E-mini futures contract. You can watch over my shoulder as I analyze the market, but first, hi, this is Bill Wood with Disciplined Trading Decisions. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Okay, thanks for watching. Make sure you subscribe to my channel. And here we are looking at the S&P 500 E-mini futures contract. Let's take a look at the monthly chart. Okay, here's the monthly chart, and you can see that we're in this area of consolidation up here. We had this consolidation down here. We broke out of it, and then we were in this 2 months. This month right here had a large tail on it. Looked like we were going to head lower, but we came back and we're balancing out of here, and looks like we're breaking out of this 2-month balance. On the weekly chart, you can see that we're in this channel right here. If we look at this according to Elliott Wave, which again I'm going to be the first to admit is subjective, we may have a first wave here, 1, 2, and then another 1, 2 making up the third wave, 3, 4, 5 making up this third wave here, 4, and then another 1, 2, and then is this another 1, 2 right here? And did we ever have a fourth wave in here? So let's take a look at the daily. So on the daily, you can see that this is the wave that we're talking about here. Right now, I'm calling this the third wave. There are some people out there calling this the top of the market right here. So I don't know if that's true or not. So I'm calling this the third wave, and I'm calling this a triangle, A, B, C, D, E, making up the fourth wave. So if that is true, if we are making up the fourth wave, then we're expecting to move higher and possibly break this high. So if we count the waves out of this wave E, then you could say maybe wave 1, 2, and then maybe another wave 1, 2 of a larger wave 3. So we're in a very interesting area right now. You can see that this was the breakout point. You might call this a selling zone. You see the last time in B, where it came up to this level, rejected out of there. Now we're approaching where B is, and so this would be a natural area to take a rest and reverse. Throw a channel on here. If this is a wave 3, you're looking for it to break strongly out of that channel. So if you look at a couple of these things coming together here, if you take it from the bottom of 2 right here, this is Fibonacci extension tool to the top of this wave 1, back down to the bottom of this wave 2, you can see that the 100%, like that, if this was an AB, some type of ABC correction, I'm not calling it that, I'm just saying, if it was, then you have the 100% level up here, you have the channel up here, you have this breakout or this selling zone up here. There's a lot of reasons for people to be shorting up here. Well, if you get people shorting up here and you break through pretty strong, then they will need to cover. And maybe that is why often when you see a third wave, it breaks really strong through this type of channel. So I'm not saying for sure that this is a wave 3, and I'm not saying for sure that this will reverse right here. This is an area where a lot of people will be watching for it to reverse. So I'll be sitting there watching the same thing as you are. Okay, this is a 1-hour chart, and you can see this Andrews median line. It respected it down here, and then it reversed right at the center median line. It's approaching that area again. You can also see, if I zoom in a little bit closer, that just this little channel that I drew right there, that it's been respecting it all this time. It's still respecting that. I notice on the RSI that we have a little bit of a divergence here. You have a higher high here and a lower high on the RSI. I am not calling for a reversal, believe me. I have been burned way too many times since 2009 trying to short the S&P, so believe me. Okay, this is a market profile chart. This is from 710. If you look at the shape of this, you can see that it's in balance. We opened here, we tested down, we rejected those this area down here. We rejected it and then came up into here, started balancing, and we tested this high several times. And we have not been able to break out of that high. And when you have all these highs that close together in market auction theory, that sometimes tells you that the auction to the upside is not finished yet. So you're thinking, okay, the auction to the upside is not finished yet. I want to go long. I want to go long. Well, what's it do the next day? The next day, it gaps really far down here, tests higher, can't close the gap, and then it spends the rest of the day down here balancing. Then the following day, it gaps back up, it tests this area of value, and then it takes off. It rejects this area down here. It rejects it and just takes off north. So as we follow this back up and get rid of this junk, we have a big tail down here, comes up, and it gets comfortable up in this area. Next day, this day here looks a lot like this day here, doesn't it? It does not look like the auction is finished on the top side. It opened here, came down. You could say, well, it left a tail here. I don't know that I would call this rejection, but it certainly left a buying tail. Came up here, balanced, so it's comfortable up in this area. It's comfortable above 2,800, and it looks like the auction is not finished to the upside. The other story that seeing all these tops in the same area, the other story that could be telling you is that the market is getting long. It's trying to push it up, can't. Trying to push it up, can't. Trying to push it up, can't. Trying to push it up. So then it has to relieve that inventory of longs. You get a long liquidation. A long liquidation makes the market stronger. It takes out the longs out of the market so that they can buy again. So bottom line, it looks like the auction higher is not finished yet. Are they getting long in here? Well, they could be. You know, do they need to relieve some of those longs? They're in the perfect area to do that. And since everyone knows that this is a good area to short the market because there's not a lot of risk to the upside before you know you're wrong, maybe they could be building up short positions in here. And if they break out, then you're really going to have a large breakout. Okay, we're back on the monthly chart, and I'm going to end with this. We have a slight breakout from this previous month. If we come back within this month and we, have a day that we close within this month, then there's a possibility that this market could come all the way back to mid to 70% of this range. So, as I usually say, that there are two reasons for the market, to go either higher or lower. To go higher, we're one time framing higher. The market looks strong. We just broke out. So all those things are saying higher, higher, higher. Elliott Wave, possibly, maybe even saying higher. But we're in a location where you could find some resistance up here. Okay, so just be careful. This is an area where it could begin to move really fast. Okay, that's all I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out some of our other videos. And while you're there, make sure to check out our special traders quiz to discover how to improve your trading. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your own analysis in order to stay disciplined to your plan. Hey, I really appreciate your likes and comments and shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.